This is the third time I've tried to record this shit. This is literally all right. But so we're gonna do this again. We're gonna do this again. Start right here. All right. So this is the strategy for this is the day trading strategy, right? Utilizing the 200 EMA line, Bollinger Bands, and the relative strength index or the RSI. All right. So the time the time frames we're going to be utilizing are the 1 minute, the 15 minute, the 1 hour, right? And also the daily. So starting off, this is the 200 EMA line or exponential moving average. This just shows the overall trend of the market by the time frame. So if the trend is bullish overall, then this line is gonna be going down. If it's bullish overall, it's gonna be going up. The way to know if it's bullish or bearish, right? If price is below this line, then price is bullish. I mean bearish. If price is below this blue line right here, this dark one, then price is bearish. If price is above this line, then price is bullish. And I don't just mean you got a few candles. I mean like the whole row is above this line. So we're not even gonna worry about that because we're worrying about the right now. Price is bullish on the 15 minute. Now, on the hour chart, it might show something completely different. See, on the hour time frame, price is above this 200 EMA line, which means price, for the most part, is bullish. This is why it's important to always check the higher time frames to know which direction the market is truly moving in. You cannot rely on the shorter time frames. And in order to know which direction price is really moving in, we check the daily and we can see that price is above the 200 EMA line. So the true trend of the market is bullish. We had a short bearish downtrend going on for a couple of weeks that I personally experienced. And then what happened? We had a 1, 2, 3 reversal. We'll talk about that later. We had a 1, 2, 3 reversal, and now we're back on a bullish trend. So this is currently where we're at. So now that we know that price is truly bullish, we're gonna drop back down to the 1 hour time frame. Price is still bullish on the 1 hour. Price is still bullish on the 1 hour, which is exactly what we want. Hmm. Okay. Boom. So what does that mean for the 15 minute? But then you're like, damn, okay, wait, hold on. On the 15 minute, price is bearish. This price is under 200 EMA line. So what does that mean? The fuck does that mean, right? It's just confusing. It's confusing to me as well. But um it is confusing me as well. But don't worry, I got y'all. Because even though that price is bearish, is bullish overall, we can still take shorts on the 15 minute time chart. But you just got to be careful when you do it. Ideally, since the hour time frame is bullish, you would want to only take buys. You'd only want to take buys. But as we can see, price has been on a downtrend in the shorter time frame. So it only makes sense. it only makes sense to take shorts. So now that we've established that, all right, price is below 200 EMA, it's bearish on the shorter time frame. We're gonna take a short. All right, so how do we know when to take a short? Red band, blue band, green band. This is the Bollinger Bands. This is the indicator that shows how volatile price is over time, right? The wider the bands are, the more price action. The more condensed the bands are, the less price action, which usually means that price is consolidating or trading sideways, which we always want to avoid trading. And usually when the bands are condensed, think of it like pressure building up in a pipe. At some point, it's going to build up so much that it's going to continue either up or down. And in this case, it just continued down. All right. So when price, when the candles close above this red line, right? When the candle closes above this red line, the upper band, that lets us know that price is overbought. When the candle closes above this red band, that's our first indicator that hey, price is overbought and it's probably going to correct itself. Our second indicator, there we go. This is the RSI. The RSI is an oscillator that shows if the market is overbought or oversold. So once this purple line closes above right here, which is RSI 70, that's our second indication that a price is oversold or price is overbought, and it's more likely due for a correction back to this baby blue line. This is the median average. The whole theory behind the strategy is that once prices are oversold, overbought or oversold, it's always going to return to the median average. So now we're gonna watch this play out really quick. We're gonna watch it play out, see what happens. Okay, boom. So we got some big movements there. Okay, so as we can see, we got a really big move up, right? We got a really big move up. Price closed above the red line, the red band right here. This is a full candle. RSI closed above 70. So now this is an indication that a price is more than likely about to be oversold. And now we got this long wick right here, but then a push back down to the previous candle. So now that price is established a resistance level. Think of it as like a ceiling, a roof, right? So go mark that. Mark that. All right. So boom, price to hit resistance. Probably gonna go back down. Well, shit, Victor, how do I know what to fucking enter at, bro? Like, all right, I got you. Don't worry about it. You go drop down to the minute time frame as you're monitoring this, right? Drop down to the minute time frame, and you're gonna look. I had to delete that. You're gonna look for this. This is a swing low. You're gonna look for a swing low on the minute time frame, and you're gonna enter on that third candle. Once you have that third candle, that third confirmation, that's where you enter at. But you need three red candles moving. You need two red candles moving down. This is your swing high right here, or your swing low. This is what you look for in the minute time chart. And you need this candle to confirm that hey, price is truly moving back down. All right. And also make sure you're looking at RSI. Make sure RSI is closing below 70. Once it's closing below 70 on the 1 minute, then you can put your weak ass stop order right here. You put your order right here, and you order. Make sure you're only using 1% of your account. You're only risking 1%. You'll come back to the 15-minute time chart. So this is where you enter that. As you see, you caught it at a pretty decent level. Then your stop loss would be right above the swing high. If you want to be extra safe, you can put it above the wick, but Like I said, you should be good. You can put it above that swing high, but I like to just put it above the wick just to be extra safe. So swing high above the wick, and you can always move this your stop loss as the trade goes. So if you're in the negative and you're up 50, $60, you can just adjust your stop loss, right? So that way, even if the trade goes against you, at least you locked in $60. You know what I mean? But stop loss up here, and then your take profit is going to be right where we talked about that median Bollinger Band, because that's where price is more than likely going to return, right? So we're going to let it play out and see what happens. Boom. Price fails to go any higher. It goes back down. And wait, sorry. It's supposed to be right here, but we would have hit profit. As you can see, we won that trade. That's what would have happened. All right. That's the strategies that I've been learning for the past few days. This is the third time I've had to record this shit. If it does not save this time, y'all can go fuck yourself. I ain't gonna lie to y'all.